Hello everyone. What are we doing this week? This weekend we're going to relax. That's why we're outside on our beautiful porch looking at our property, relaxing. But should you really be relaxing? Should you be really relaxing? Because winter's coming. Hold that thought. Hi, welcome to The Smart Investor, where I'm here to help you understand and making sense of this big mess that we're in right now, that nobody really understands. Because if we do it, we all be making money in the stock market and nobody be losing any, right? So the trick is you need to know where you need to be in this market. Okay, so what's really going on? First of all, you need to realize that over the coming weeks, a few things are going to be happening. Next week is the Fed decision. Next week, there's a bunch of earnings coming up. Now, you need to know the earnings because you need to know what is going on. And at the end of the day, you also need a feel for what the market is doing. And then you also start, because there's a rotation going on with stocks, you need to get a feel for value stocks, stocks that are undervalued. Not so much growth stocks, stocks that are, because we've got them, right? We got Nvidia, we got Tesla, we got all these others, well, not Tesla, but Nvidia, a bunch of other technology stocks. We're going to need to start looking for value. But having said that, you also need to get a feel for the environment that you're in, right? If you're gonna drive a car, if you're only going to do highway driving, you need a certain kind of car. If you're going to do only city driving, you also need a different kind of car, right? So you need to know where it is that you're driving. You need to know what it is that you're investing into. And once you understand the investment horizon, then maybe you got a chance. Now, also, one of the interesting point I want to point out to you, is that because we don't know what's happening, we're trying to guess. Is the Fed going to lower rates? Do they feel that the economy is slow enough? Probably not. They're probably not going to lower rates. But the point is, at some point, they're going to need to do it. But then again, they may and they may not. Are they being pushed by consideration having to do the elections? Who knows? But the point is that you want that volatility. You want that risk. And this is how the use of options, very risky obviously, but the use of options is very important because you play that volatility, right? You want this. I know it feels bad because you're going to lose money, you make money, you lose money, you make money. But in options, you could make money all the time, right? As long as you have volatility. When stocks just do this, it's okay. But if you put a put and the market is going up, you're not going to look very nice. Anyway, so what's really going on? First of all, winter is coming. Okay, I hate to say that because I want to explain to you. That's my goal here. And don't forget, do subscribe and do like. The likes are extremely important for the algorithm. Okay, and I'm seeing more and more traffic. So, winter is coming, first of all, for the elections. Well, what do you mean? Well, it doesn't matter who wins, right? If it's Kamala or it's Trump, either way, people are going to be unhappy. It shouldn't be that way because, you have one president for everyone. But so winter is coming. And the reason I'm telling you winter is coming is because neither one of them are talking about important topics. No one of them is really addressing the debt. They're addressing concepts that you can understand. The border, having to do with birthrights and all that you could relate to, right? I mean, either you're in the border or you're not, or you're born or you're not born. Israel versus Palestine. The thing is, what you need to really worry about as an investor and also as a person living in the US and in the world, technically speaking, because we're going to impact everyone else, is the debt. We only have about 10 years. Technically, in 10 years, and look at my video on that, in 10 years, we basically running out of money for your Social Security and we're running out of money for your Medicare. unless we keep raising, keep borrowing more and more and more. But at some point it stops. At some point they're going to say enough is enough. And then what are you going to do? Okay. No one is talking about that. Yeah, I know one of the candidates talking about, reducing taxes, because if you reduce taxes, it's going to promote the economic activity, hopefully, right? Because the only way for you to take care of the debt is, as I explained before, you're going to need to either raise taxes or you're going to restructure expenditure. Either you're going to spend less, right? It's like a household, basically, okay? Anyway, the second thing is that winter is coming in the stock market. Why? Well, because we've been going up a lot. And we have names like Tesla with PO64. We have NVIDIA, which is doing great. But how much growth do you have? Is there left in you? Especially if we feel that the economy is going to slow down. So a lot of uncertainty there. And I'll do another video on this because I don't have the time now. But winter might be coming for housing as well. Why? Isn't it great that rates are going to come down? Yes, it is great that rates are going to come down, but there's a huge amount of inventory out there. And for you to, and don't forget, yeah, rates are coming down. You're assuming everybody's got a job, right? Because on top of that, we have an economy that's slowing down. That is not going to be good for you to have a mortgage, because you can't pay for it. So we have huge amount of inventory. We have still high rates, but even if we have lower rates, what does that mean for you? Well, if the economy is also slowing down, then that's going to be a problem. And what do you do if people don't have jobs, they're not buying houses, and you have a large inventory? What do you do to move the inventory? You got to lower prices, like in 2008, to move the stuff along. So, and since everyone's money is really in their houses, be careful, right? So you got winters coming across the board. Now, more importantly, what is coming next week? Because you need to, I'm here to help you make money, right? I'm here to make you decide where you should put your money. Well, next week is going to be very busy, right? Because we're going to have the Federal Reserve monetary policy decision. And so are they going to lower rates or not? And we have lots of earnings starting to fall through. We're going to have Microsoft. We're going to have Meta. We're going to have Apple. We're going to have Amazon. That's going to rock your world as far as the market is concerned. Again, if you're looking at financials, that is not bad, because let's take a look, for example, at our portfolio. Right, so my portfolio, let's see how we're doing here. As you could see, right, up 7% on the options for the S&P, down 5% on Tesla. Recently, right, Tesla is down 20 cents. Of course, I'm down a lot more with the options. So we've got some action coming. I bet you that now, of course, you could put a put on the market, so that in case something goes the other way, then you could benefit. That's always a possibility. Now, the Fed is widely anticipated to hold the federal state study. That's a fact, right? But we need to hear from the Fed in terms of, okay, so what are you going to do next? Because now they want to hear about him for next month. Now, Tesla. After Tesla and Alphabet disappointed with the result, the numbers from the rest of the Magnificent Seven are basically the top 10 stocks, which is what we talked to you about: Amazon, Microsoft, right? So Alphabet and Google basically, and Tesla didn't do well in their earnings release, which ties into winter is coming for the economy, okay, and tied to the housing. Now you're going to also have Intel, we're going to have Merck, we're going to have McDonald's, You're going to have Exxon. All these kind of companies are going to release earnings. And that's important, right? Because you need to know what's going on. Now, one thing that you need to find out is, yeah, but I need to put my portfolio to work somehow. And how are you going to do that? Well, the way you do it is you need to protect the portfolio. Like I always said, it's not just about making the money. It's about protecting what you have, which many people really don't. They just think that stocks are going to go up and up and up and up. But you also need to look at the downside. And the downside is quite tricky, okay? Because we have winter coming from everywhere. But again, it doesn't mean it's a bad thing. Right? You could benefit from it. We could, for example, if you look at the SPY, which is basically the S&P 500 trading in an account, then you should be fine. But the thing is, you need to realize that you need to be in the middle, right? You need to be in the middle. You need to understand what you're doing. You need to understand what you are buying, and you need to understand where the market is going. So let's watch out for next week, because next week is going to be a pretty important time, technically speaking. Why? Because the Fed is releasing its earnings. Why? Because not the Fed. Fed is basically going to tell you about the rates. Now, rates are important, obviously, because when an asset goes up in value, usually when the discount rate drops. So technically, we should see the value of the assets going up. Unfortunately, that is not the case all the time. That is not the case all the time because in this case, if we see a decrease in rates, you also do that when you want to stimulate the economy because the economy is not strong enough. So they may indicate that, oh, we're in trouble, the economy is slowing down. But I thought you wanted me to lower rates, so I'm lowering rates, now you don't like it? So you never like it. Basically, that's what it is. You have to understand that the market is like a child, right? It needs to be fed, it needs to be entertained all the time, which is good. I mean, you want entertainment, you want to move, because you're able to position yourself. Now, the thing is, if you're going to be running after the market, try to understand it, then you have to do like I do every day, figure out what's going on to make position, go in, go out, go in, go out, understand. But if you don't do that, then you're lost. You also have to understand that while it's good to have a portfolio, the portfolio has a life of its own. What does that mean? It means that it may not be necessarily a good thing for you to have a portfolio that is not well diversified. Because, I keep talking about single name, right? The Tesla, let's make money on Tesla, let's make money on S&P, and you hear that from other people as well. I'm not here to tell you what to do, right? But I'm here to tell you what you could do, and I'm here to tell you where there's value. The thing you have to understand that, yeah, maybe you get it right. Like this week on SPY, we had 7% in one day. Great, because the market goes up 1, we go up 7%. But you got to be right every single day, and you're not going to be right all the time. In addition to that, you're not going to just own one position. The same way a portfolio manager is not going to be allowed to have a huge position on our friend NVIDIA, because there's too much risk in one name. Look what's happening right now. So the question is, where do we position ourselves? What do we do? Well, the way you do it is you got to be in it every day, right? You got to be in it to win it. You need to understand what's happening. You need to look at different opinions. Look at different ways. So specifically, do not be very wary of someone, including for the election, that tells you, hey, this is no good, hey, he's no good, hey, she's no good. There's no such thing. Because at the end of the day, I will tell you that if I look at Tesla, for example, and I could say, I don't like Tesla. Why? Look at Tesla. Tesla P ratio is 63. This is crazy. And what do? They make cars, right? And look at GM. GM is a P of 7. That doesn't make any sense. I should be paying 63 times their earnings. Well, GM is 7. So you're wrong. And the guy says, no, you're wrong. Why? Well, because I don't look at Tesla as a car company. Really? No, I look at Tesla as this company that's trying to save energy, that's making cars, but it's also doing the robo-taxi. That's going to be maybe have some tremendous amount of valuation if this thing takes off. I mean, nobody drives anymore. Imagine if everybody, because a robo-taxi basically means that if you have a Tesla, you just park it, and when you don't use it, somebody takes it. Not somebody, but the Tesla itself drives itself to the next destination and pick up someone, which is kind of hard to believe if you're driving a F-150 truck. If you're driving a Tesla, you may believe that it's possible. But the point is, it depends how you look at it. And when I look at it this way, I feel it doesn't make sense. When you look at it the other way, you're going to say, no, maybe it does make sense for Tesla to have such a high PE. But the point is, does it make sense? Doesn't make sense. It makes sense, doesn't make sense. But that's okay, because that volatility you could take advantage when you do options. But it also means that there's also different opinion on different things, right? So you can't really see that this person is good and this person is bad and vice versa. It depends how you look at it. So you got to make sure that you don't open your mind just to one set, because then you believe only one thing and you're looking at one thing, and suppose you're wrong on that one thing, then you're off. And unfortunately, everything is polarized, as we've seen in the past couple of weeks. But the market is polarized as well, right? If you go on YouTube, you get all these people telling you, buy this, this is my top stock, this is how you're going to retire. Come on, do you actually believe that? It's like telling you that one candidate is all bad and the other candidate is all good. Well, but some of the candidates don't even talk about what they're supposed to be talking about, because you don't want to hear about, cutting down food stamps, right? You don't want to hear about we're going to raise the taxes. You can't hear that, we have to start cutting down on lots of expenses because we can't afford all these all that money that's being spent. And the money is being spent because we could afford to borrow. I mean, the US is a large country. And frankly, you could always say that as long as we have growth in the economy, then we're going to be okay. But I don't know. I am not so sure. Now, if we were to look at some of the other stock that we have, let's talk a little bit about some undervalued stocks. The stocks that has done well, 48%, not so great, but Sherwin-Williams, for example. Isn't it kind of a boring stock? Well, I don't know. The stock is up. The P ratio is 36, right? It's a kind of a boring stock because the beta, as you could see, the beta is 1, which is not very much volatile. And if we look at the past 6 months, it's up 14%, the past year 11%, 1 year 28%. I don't know. Maybe there's something. Well, but hold on. Do they make what the financials look like for Sherwin-Williams? Well, I will tell you that, as you could see, we've got some slow and steady growth. As you could see, if we look at the EBITDA, I went from 3, 5, and 4, 1.3. A little bit boring. And they have low interest expense. How is a company really worth? Well, I don't know. I mean, if you look at the EBITDA of 4.3 and you assume that the discount rate is 10%, I don't know, this company is worth $4.43 billion. And what's the summary? What's the market cap? Let's see. $88 billion. Oof, that's a lot. Even that stock might be overvalued a bit. So what we need to do is we need to focus on stocks that are undervalued, because that's the value stocks. We need to look at the intrinsic value. Now, the intrinsic value that we're seeing right now, you're seeing relative value, right? Everybody's bidding up the names because they're expecting huge amount of growth. But how much growth are you going to get? How much more of that do you think is going to happen? That's a lot. I think what we need to look for is intrinsic value. And intrinsic value is really how much money the company is making and how much is it really worth. It's like a house. How much is your house worth? Well, what somebody's willing to pay for it. Yeah, but how do they know how much it's worth? Well, you look at the neighbor. In this case, I'm looking at the neighbor, which is Nvidia or some other stock, and the stock is going up and people are willing to pay 50, 60 times. For example, let me show you something. What is the P ratio, right? The Schiller P ratio. Where's the market at? Okay, this is where we are. We are at 35 right now. The average P ratio is at 35. What does it tell you? Well, it tells me that the last time I was that high, it was COVID, it was 2008, and it was 1929. Right? So we're high right now. So unless you keep having growth, then you're going to be rewarded. But if you don't have that growth, 35 is too high. It's going to have to come down. So what you need to know is you need to get those P ratios. You need to start looking at names that have low P ratios so you don't get hit too much. Of course, if the company has a low P ratio, that means that people are not bidding the work because they don't think it's going to grow that much. Well, it's going to have to be that you think it's going to grow. You want the name that is going to grow. So, and it's been shown that you make more money with low P ratio than high P ratio. But doesn't mean I want a low growth stock. I want a fast growing stock that is a P ratio of 10. I want to buy Tesla when it was at a P of 10. That's what I want to know. So what we're going to do in my next video, we will look at finding out, and you could try on your own if you want, but you need to find stock with low P ratio with lots of growth in it, or lots of growth potential. Now obviously, if everybody sees it, they would have bid up the name already. Well, who are you to know? Well, I will tell you, I did that with that portfolio of mine that I'd created over here. And as you could see, if you look at the older position, forget Tesla and SPY, these are new. But if you look at Tesla, okay, I was off on Tesla, but look at this. Overall, I was up, 169, 45, 60, 80, 10 for the past 2 years. And that's what I did. I picked low PE stocks. I mean, if you take a look at ECL, for example, what do they do? Ecolab. Never heard of them. Exactly. That's what you want. You want to be silent but deadly, right? You want to be a P ratio of what? 48, 45. Even that stock is pretty high. Although you should be careful in the P ratio because it's price to earnings, right? Price to earnings per share. Don't always rely too much on it. But if you look at Ecolab, for example, and I look at the financials, 11, 12, and these are million. 11 billion, 12 billion, 14 billion, 15 billion. We're slowly growing up. We're making money, right? From 2 to 3, and we have almost no interest expense. So these companies are growing. That's important. So Ecolab is an interesting name as well. And this is kind of what you have to start looking for. You have to start looking for names that have value built into it, but the value has to be the intrinsic value. Going back to the example of the house, how do you know what your house is worth? Well, technically you need to know, and this is almost impossible, but how much does it cost to build a house? Now, of course, if the house was built recently, then you have a good feel for, usually builders don't put that much, 10% on top of the price of the house. They don't make that much money. But if that house later on, like mine almost doubled in the past 4 years, I don't think that every single material in the house went up a lot, right? It's just a perception of the area, the perception of the money, the perception of inflation. Houses move up with inflation. But the point is, the value of the house is still there, right? That's how much it costs to build a house like that. And maybe inflation went up because it costs higher to build a house. But how do you know if the cost of the house going up, is it because of the value of the house or because of what goes into it? Right? There's a perception, and that's why it's difficult. That's why it's difficult to actually come up with a value. But right now, you want to find out the value of the stock. You want to find out what the stock is really worth if you want to make money. Because soon, if the market rotates and the economy slows down we are mostly looking at value, you don't want to be holding on to Tesla, as you could see recently, unless you do an option. You don't want to be holding on to Tesla as a stock, as it keeps being disappointing. And frankly, the way I'm looking at it, Tesla is high. It's got lots of things going against it right now. It's going to take time. Volatility, I think you may want to look at a put. Maybe a put on Tesla wouldn't be a bad idea, because if they disappoint again in July, August, September, in October, bingo. Then again, they may not. Then again, they may. But that's okay. Maybe what you want to do is you want to put a call and a put. And then you just wait for the volatility to hit on, it's called a straddle. It hits on one side and it hits on the other side, and you make money both ways. I mean, not right away, not the same day, but over maybe a significant amount of time. So that's what you need to do here. You need to follow. So keep in mind three things actually, that winter's coming. And if winter's coming, you want to be warm. And how do you get warm? You understand what you are. You stay in your house, you stay warm, put the fire on. Let's see what happens next week. It should surely be a very interesting week, especially when it comes down to the stock market.